Hi, everybody. This is the Bitcoin Critical Pulse. Today is 7/25, 2025. I am here with Chris, and this is a show that started a few weeks ago. Basically, the main purpose of this show is that we are discussing a new way of thinking about the market, not just Bitcoin, but the entire ecosystem around Bitcoin, some of the other derivative or products around Bitcoin. But the main idea is that this is a very much a physics way of thinking about the universe in general, and in particular the market. And Chris is in alignment with this. He's more of a his background is more in traditional finance, but over the year he got this illusion about some of these traditional tools, and he discovered, like I did myself, this physicist. His name is Sornet. He developed tools from his physics background, is in particular geophysics, where sometimes we see these critical events where very precise patterns happen before some kind of transition between order and disorder, order and chaos. We have a terminology in physics for this. We call it critical phenomena, and the relevance for the market is that you can find similar patterns in the market because these things are universal, even if they involve human beings, human behavior. Humans are still in nature, and behave like natural things. In particular, when we work together as groups. So he started to notice these patterns and characterize them mathematically and identify them. In particular, we are talking about when the market goes from, for example, when we have a peak, when we have a bottom, and we go towards a very fast movement in price in both directions. It doesn't matter the direction. One of the things that you learn from this approach, and Chris can explain it better, is that direction is a secondary thing. What is important is to know, are we in a situation where nothing changes much, or we are expecting some big change happening, and then the direction we can still try to understand where the market is moving, but it's more fundamental to understand if we are ready for such a change. So this is the approach. We are developing a bunch of tools that are useful to do this. They are very actionable tools. People can use them to do all kinds of things. In particular, I'm becoming more and more, I'm sending a stronger and stronger message that if you want to invest in Bitcoin, holding, it's not going to make it anymore. You need to be a little bit more aggressive, particularly if you are a new investor. If you want to see some of the great gains that Bitcoin has, because Bitcoin has both characteristics of being a long-term investment. We even can project the long-term trajectory using the power law model. At the same time, Bitcoin has still a lot of volatility, more than other assets. And if one knows and tries to understand, try to spend some time in using these tools, you can actually act on this knowledge and benefit as an investor. So that is our approach for this particular show. We will try to introduce. We have a newsletter. We have a website. We have a newsletter. I will link all this information so you can learn more about this tool. In the newsletter, we introduce some of the basic principles, but we want to give a live demonstration of how to use this knowledge, looking at the market itself. Chris, do you want to add anything to this, or
No, you've summarized it pretty well. For those who've tuned in before, it's pretty much the same thing. We're trying to identify a suite of scientific-based tools that can help people with their investment process and trading of Bitcoin and other instruments. So with that, I think we can move straight into the update, and we have to put our little disclaimer up first because This is not trading advice. It's not financial advice. It's for educational purposes only. Trading involves risk. Past performance is not a predictor of future performance. So please read the disclaimer and do your own research, and we can now move on. So I'm going to share my screen. And you'll recall that last week when we spoke, we were at this point right here. It was Friday a week ago, and we had an upside projection still in place from the monthly chart, nothing in the weekly, and the daily chart had just given us a downside projection of $115,000 for Bitcoin. So we're going to sort of do an update as to what transpired over that period and try and put some context around what's going on with price today as we observe the log periodic power law critical pulse tool and its interpretation of that. So we're still in this white state. We think things were unresolved. And as we moved forward, we saw price move down a little bit. And you might recall at last week's update, we talked about how this kind of back and forth price activity was necessary to start generating higher and lower price projections from the temporal mode tool that we have. And that indeed is what started to happen. We got these different projections, a lower one here midweek of 112,000. And these different projections started to be hit. So as time went by, we had an upside move pretty nicely on Tuesday, and you'll see here that the static pulse was double green. This is a state indicator that monitors the relationship of the two critical pulse lines. And when you get these double signals here of green or red, if it's moving down, they're very powerful and pretty accurate. So I was pretty encouraged, and literally just after I saw this happen, the power law lines both moved into a purple state, which is very agitated, represents period doubling and a more fragile state, but it was moving to the upside. And that's what happened in this period right here, where we broke out of the white state and moved very aggressively up. And I thought perhaps we were going to have another leg like that. But what transpired was, market ran out of steam and it started to print to the downside. And in fact, today, these lower targets of 115,000 were met. So they were projected a week ago, they hit today, and with the reversal activity, we're starting to get these different higher and lower price projections. So the question right now is, what's likely to transpire? And as usual, we can get some guidance from the lower time frames. And as you go down from the daily to the 8 hours, the 4 hours, you'll see that the pattern of the power law lines, the static and the pulse evolves, and we get many, many more prints to the up and down side that are quite tradable. And this process continues where these patterns evolve and change as you go down in the time frame, and you see these very familiar types of signature classic formations as we have right here, where the static is in a white state, but the pulse breaks out, and then we get these confirming signals from the indicator that the market's moving up. So these patterns just constantly repeat through time, and even as you go way down into the half hour, there's the 30-minute, the same pattern, 15 minutes, very similar sort of a pattern right here, a little bit different. And it gets a little bit noisy as you go into lower and lower timeframes. But all of these things are happening at sort of a more micro level and are giving us clues as to what's likely to transpire here. But one thing that we've developed, which is a bit different, and I'm going to spend some time on this today, is a tool that we call the Fractal Node 6. And this is not a price predictor. It's not any sort of a trend follower or traditional indicator in disguise. It's really what I call a structural adjudicator. So it's a regime state detection engine that really looks at every bar using a number of different models to try and understand behavior. And remember that our thought here is that in markets, it's structure that's the most important thing, that price is a derivative or at least determined by structure. And if you can understand structure and the behavior that's generated by structure, then price is almost automatic. And as Giovanni mentioned earlier, we think of it in two states when we think of the log periodic power law critical pulse tool. It's either confused, it's in a white state and unresolved, there's tension that needs to resolve and figure out what it's going to do, or there's coherence and commitment. And that's when price moves out of the white state in a direction, and that direction is either up or down, and price will just follow that until it gets exhausted again and re-enters a white state. And once you start to embrace that way of thinking, it gives you a different perspective on the markets and how to trade them. But the difficulty that we face right now with this sort of, I guess, traditionally to be called consolidating price activity is what is really going to happen. So this tool, the Fractal Node 6, is designed to try and understand that. It's not predicting price. It's not a buy and sell indicator. It just interprets how price behaves within the system. And that's a distinction that really, changes everything. So we're sitting at the fulcrum, I guess, between compression and decompression, identifying when the system's transitioning. And that's what we're trying to understand. So here we have this set up for the daily chart. And what you see is the most recent phase is labeled 3 and 2. So the Fractal Node 6 generates and classifies moments into 3 states, or 6 states actually, 3 with strong directional coherence upward and 3 down. So +1, +2, +3, -1, -2, -3. And there's a background color associated with that that's displayed: green for up, red for down. And that's what we see right here. So we had this strong move out of the white state that we saw move all the way up to 123,000, and then pull back, and we've got this consolidation. So the question that we're asking today is this market going to break down, or is it going to continue? Or is it going to consolidate for a bit more? And right now, what this is telling us is that the filters have identified that there's consistent activity and behavior in coming from the participants as expressed through price to suggest that it's still a positive coherence, a positive outlook for the moment. And that's at the daily level. But in the same way that with the critical pulse, we went down into the lower time frames to get clues, the same thing happens here. And just before I do that, I'm going to point out that there's this blank space here, but there's still, a good directional move in price. So why aren't we getting a coherence signal in this area here? And the answer to that question is that if the models don't agree completely, then it has no opinion. No opinion is expressed. It's either +1, +2, or +3, -1, -2, -3. And in between, and you can see another example over here where we've moved from a negative state to a positive state out here, and a very strong price move. Why isn't there a signal from Fractal Node 6? Well, that's because the price moved out of this area here where it was negative. The critical pulse lines expressed positive directional movement, which is exactly what happened. The models did not disagree with that. They didn't agree with it either necessarily at this time frame, at this scale, until we moved all the way over here and prices started to exhibit behavior where we generated these +3 type conditions. The point is that I want to make is that in these spaces between periods where we've got indications going on, that when you move to lower time frames, let's go to the 1 hour, and this is the edge of that time frame. So let's just look at the other side of it. So between here and here, you can see there's a lot of different signals being generated in the lower time frame. So back to the daily, that's the time frame we're looking at right here, this gap right here. And as you go down in scale, you can see that you're getting additional signals at the lower time frames. And this is really helpful when you're trying to figure out what these pullbacks are doing. What is the character actually revealing by this fractal node methodology about commitment to the market at this level? So all through this period of uncertainty, up until this period here, the market was pretty much okay. It's fine with price at this level. But most recently, it started to doubt that. And as you go down to these lower and lower levels, you see the same sort of interaction where and this is live right now, so this is very current and topical. You can see that the lowest time frame here, 1 minute, not the lowest, but one of the lower time frames, you can see that we moved into these positive episodes of coherence, and price has moved up. And most recently, in the last hour or so, that's changed. And what we're looking for is for these lower time frames to start agreeing that price has stabilized, that behavior has stabilized, and that's transposed into price activity. So here in the 5 minutes, we've come out of a green space and we're into from the fractal node indicator, and the critical pulse tools are showing us a white state, so it's still a little uncertain. And as you move up, you can see that this pattern starts to repeat. So we'd like to see, a green state emerge in a number of these going forward to give us the confidence that the daily perception of a green state 2 is actually sustainable at this level. So if those lower timeframes continue to print -1s, -2s, -3s, then that will put this in jeopardy. And that's what that tool does. So it's not a buy or a sell tool. It's what is the behavior, what is the condition, what is the state of the market at a point in time, and how do we use that to try and understand and interpret what the power laws are likely to give us in terms of price activity and projections going forward. So that's kind of how the critical node tool works. When you use it in conjunction with the log periodic power law, you get a pretty powerful suite of conditions that can give you confidence to enter and exit the market at different levels.
Like it, Chris. Do you have some of these tools available also for MicroStrategy, for example?
Yeah, we can look at MicroStrategy. Let's do that.
I really like this view of many time frames. It's very cool.
So here's MicroStrategy on the daily chart.
Mm-hmm.
And you can see that this state table here, let me just get out. Oh, hang on. Let me get out of that. Okay. So this little table down the bottom here is really a good, it's a very powerful component that we added to the tool just in the past week or two. So in the past, we're looking at just these lines and the relationship between them, and you can see there's distance between them. They have sometimes they coalesce and they're one on top of the other, and then they separate. But the analysis that I've done shows that when you get a dual state condition like we have here, 2 reds, it's very bearish. If they're 2 greens, it's very bullish. They're very powerful signals that this generates. And you can see that that this state really occurred, a couple of days ago on Wednesday, and that master strategy has been moving down. And then we've got these confluence and confirmation signals coming through as well. And remember that when we were looking at other strong moves in the marketplace, and here's an example here, when there's a strong move, you only get these confirmation and confluence signals that support that move. And it's when the move runs out of steam that you start getting the opposite signals being generated. So master right now is showing that it's exited a white state and that it's trending down, and that there's downside projections being generated currently at 385 roughly, and it seems to be sort of continuing in that way. If you look at the lower time frames, let's go 8 hours, same thing. 4 hours, same thing. 2 hours, same thing. I mean, this is fractal. It's so self-similar. I'm constantly amazed. There's 1 hour, 30 minutes. 30 minutes is kind of bottoming out here. The question is, will this be a stair step to the downside or not? So you can see here that the latest state table is showing a static of white and the pulse at red. That's kind of caution. You'd be wanting to see how this plays out a little bit at this level, but maybe you can get a clue as to what's going to happen by moving to the 15 minute. And you can see that we've had this white state and it looked like it was going to turn to the upside from it a little bit, but most recently it's headed back down. So 2 reds, another powerful signal. But interestingly here, there's no real new downside price projections being generated by the temporal phase model. There's some old ones, P4, which I don't think has been invalidated. No, so this target down here is still live, hasn't been knocked out by price activity. So it's potentially in play, but that's the only one. So 5 minutes, same thing. So it's very interesting. You know, it depends on the time frame that you want to trade, what your focus is particularly. But let's go back to the daily and see what the fractal node tells us about that. So let's go. Okay, so this is still printing 2s and 3s, which is, you know, positive coherence. And interestingly, we've got this negative print on the LPPL, which is, you know, completely at odds with the fractal node. So the fractal node is saying that the market still wants to buy this, but the power law is saying no. So maybe you'd be a bit cautious playing it from the short side until there's resolution out of this. But let's go down to lower time frames and see what we get. So when you get down to the 4 hours, you can see that it's stepped out. So it's no longer generating, the fractal node is no longer generating coherence. It doesn't have an opinion because the models are not lining up. And as we go even lower, you can see that we've started to get negative coherence and separation of the power lines. So that just kind of confirms what we were seeing before with just the raw power lines by themselves. So, you know, with these lower time frames looking weak, you'd probably want to be considering trading that to the downside.
Do you see a major difference between how things look like for MicroStrategy and Bitcoin? Do they have their own? They are going to be correlated, but you see some structural differences?
Yes, there are huge structural differences. Firstly, Bitcoin's its own thing. It's its own entity, and it has its own suite of dynamics that drive it, and it's autonomous. It's very, very different from Strategy, which is a company that is listed on the exchange and that operates in an unusual way. It issues an array of financial instruments to buy Bitcoin. So whilst its major asset is Bitcoin, unlike Bitcoin, Strategy also has shareholders, and it has debt, and it has a complicated capital structure with different classes of shares, be they convertibles or prefs and other variants, that are designed to emulate parts of the yield curve and generate returns for their investors. And it's not an arbitrage. Anyone who says that what Saylor is doing and what Strategy is doing is an arbitrage is just wrong. It's not. It's a levered play, and it's about as clever as long-term capital markets levered arbitrage plays were. That is, it works until it doesn't work. And the capital structure of Strategy is the key difference between it and Bitcoin. Bitcoin doesn't have that. It doesn't have shareholders in the same way that, or debt holders in the same way that Strategy does. It has owners, people who own Bitcoin. I suppose you could call them shareholders, but there's no dividend. And it's you hold it and you hope that the price appreciates, or you trade it and you seek to generate returns that allow you to compound your position or to generate income. Strategy is totally different. It's a structural difference that could work out very well, or it could cause problems, particularly if the price of Bitcoin was to fall below the average price at which Strategy has been able to acquire it. That's the key difference.
And how this shows in the indicators. This is what I was looking for, like an explanation of how we can check that the indicators actually showcase this difference.
It's going to be perception, I think, and that's one of the things that I'm sort of investigating at the moment. So with Fractal Node 6, it's looking at the behavior underneath price. It's looking at all of the participants who are active in the market, and it's looking at all the transactions that are passing through and generating price. And it's looking at them through multiple lenses that are completely unassociated with each other. And it's taking those results and characterizing them as behavior. And the other week we talked about the transition of water to ice. And if you want an ice cube, that's great. But if you want to know when the water is going to become an ice cube, then you really need to look down at the molecular level and watch the crystals actually forming and clustering and grouping, and then all of a sudden they become an ice cube or an iceberg or an ice block, whatever. And that's exactly what we're doing here with the Fractal Node 6. We're looking at these inflection points that aren't seen easily, and using very sophisticated tools to identify them and characterize them. So with Master, you have a different suite of players than you do in Bitcoin. And therefore, the only way to detect relationships would be with traditional tools where you're looking at correlation, and perhaps you'd be looking for correlation to break down or shift. You'd be looking for different types of tools that you may be able to use to identify that. Would a Hurst exponent help you? Perhaps, but not really, because all it's going to tell you is whether price is trending, whether it's mean reverting, or whether it's random. It doesn't care about direction. This tool, the Fractal Node tool, it'll tell you about those things that are important. And the difference here is that the Fractal Node 6, when you apply it to Bitcoin, will be looking at the fundamental behavior of its investors, who are characterized in that Sankey chart that I did the other day. So it's all of the holders, everyone who's basically owning for the long term. And that's a big chunk of the free float, if you like. And then everyone else who's in and out of the market for whatever reasons they are. And that's a smaller market. And meanwhile, the actual float, the available amount of Bitcoin is not that large if people just keep, putting it into treasury vehicles or into sovereign holdings or into ETFs, or just taking it out and putting it in their wallet and putting it in a safe somewhere. So the difference between that group of participants and the behavior that's manifested in price that's identified by the Fractal Node 6 is very different from the behavior of investors in Master. And that's because the players are completely different. You've got some proxy owners of Master who are owning it because they want to own Bitcoin, but don't necessarily want to own it in the traditional sense. They don't want the hassle of owning wallets and all the rest of it. So they look at master as a potential proxy, but it's not a correlation of one because it has these different structural components that will influence it from time to time. Now, sometimes the correlation will be very strong and there'll be no difference. But at other times, when the price of Bitcoin is under stress or when people have a change of heart about master's capital structure, which they don't at the moment, then you'll get a different set of transactions occurring in the master share classes and financial instruments that they've issued that are driven by completely different considerations from those people who are transacting in Bitcoin. And you may see that in a correlation breakdown, but you won't understand the character of it. And the character of it is exactly what the Fractal Node 6 will identify.
Great. Thank you. Very good. Okay. So basically, right now we are in a wide state. We are looking for some transition, right?
Yes.
Okay. Yeah, it's so interesting that Bitcoin goes through this kind of almost ladder, right? It has a stable price for a long time. People find it boring,
Yeah.
and then all of a sudden we see these changes, and these tools really emphasize how this is very structural.
Yeah, it's completely structural. I'm constantly amazed at just how self-similar these patterns are. They're just scale invariant, and they repeat. And once you start using this tool, you can identify those patterns, regardless of the time frame that you're interested in trading, and you can use them to develop strategies to either trade just speculatively, or if you're a hodler, to create income generating strategies or ways of generating income that will allow you to compound your holdings of Bitcoin.
All right. So one of the things that people can do during these times where the price doesn't change much is to maybe do cover calls, right? And come up with some particular prices that it's very unlikely we reach within, let's say, a month. Can you maybe identify a level that you think could be good to use, let's say, a strike price for a cover call? And let's do this. If you don't mind, with Bitcoin, and then MicroStrategy and IBIT, because a lot of people use these three.
Yeah.
And I know that it's difficult to come up with a particular price, but let's say we were trying to do something like that, because I want to make it more actionable for people. So one of the things, just to explain for the people that are not very familiar, I see a lot of Bitcoiners do these, right? So they buy IBIT, for example, or you can do it with Bitcoin. Bitcoin options are available mostly on exchanges like Bybit. So if you are in Europe, it's something that you have access to. If you are in the United States, not so much. There are a few places where you could probably buy options. You need to research it in the US, but you can do it with IBIT. And the IBIT is much strongly correlated because it's basically, it doesn't have all the uncertainty that are associated with MicroStrategy. It's in fact, we could look at that too. It should be much stronger correlated, with Bitcoin action. You can derive what could be the strike price from Bitcoin price in terms of percentage, right? You're looking where IBIT is right now, where we are thinking Bitcoin is not going in the next month. So we could look at the option chain and say, okay, there is this factor. Let me do that.
Right.
So what if you had added to identify, let's say in the next month or so?
So we know what do we know at the moment? We know that there's a target that's generated by our temporal phase model in the monthly chart at 120. That's now 124,000.
Yeah.
So the market took a tilt at it. It got as high as 123 to 231 before pulling back. So that level up there is one that the market has had trouble reaching. So somewhere up near there is probably very safe, but it depends on how aggressive you are and how committed you are to putting an option trade on, whether you want to do it close to this white state line, which is around 120,000, or whether you want to do it 121, 122, 123. It just depends on how much risk you're prepared to take with that particular trade. And we don't know when price is going to move, but we have some clues. And the clues are that this white state needs to resolve and move, and we don't know when that's going to happen. But if we started back here on the 15th of July, and it's now the 25th, there's 10 days. So ordinarily, these white states persist for several days, sometimes months, but you just don't know when they're going to break. So we almost had a breakout right here on the 21st, 22nd. But it resolved again into another white state. So my thinking is that you'd probably want to do something that was a weekly option that you'd want to be short, and you'd probably want to be somewhere above this white state line, but with a margin of error that gave you.
So let's say right now we have July 31st as
So I don't have any option prices up on my screen,
at least for IB.
Yeah.
Yeah, I have them, and I can mention to you. In fact, can we switch to IBIT? Because I think a lot of people.
Yeah,
exactly. So right now, the current price it's about 66.
So let me see if I've got the projections.
66.65. So let's say that we are looking at the July 31st. What could be a good strike price? And remember,
okay, so
we're not giving financial advice. We are just doing this for educational purposes.
No, this is just a complete educational exercise.
We want to show how to use this tool to do actionable things. So let's say I want to do a cover call with a relatively short time horizon. So I'm looking right now myself on Robinhood. By the way, Robinhood is a good place where to do this. I'm looking at July 31st. So it is not too far away. So we can look at July 31st, maybe.
Okay. So right now, spot is 66.36.
Right.
The daily white state is 68.16. So 68. And now let's see what else we can discern from the information that we have. There are no upside projections of any significant magnitude. There's one downside projection of 64.88. But let's go out longer time frames. There's nothing on the weekly. It's kind of a little weird. Here's the monthly. The monthly, we have a projection of 69.20.
Okay.
So 68 to 69.
So maybe
would be
70, right? Just to be on the safe side.
Yeah.
So okay, so that right now, and you guys, if you want to follow on Robinhood, if you have Robinhood, you can open looking at July 31st for the expiration date. I'm looking at the 70. So that one, so because you will basically sell it, and you're going to do something. So the bid is 0.25. The ask is 0.26. So, if you had under contract, that will be not a lot of money, but it's one way of getting a little bit of yield, right? So if you sell under contract, you will get $25, right, on immediately, and you can buy more IBIT with that, or Bitcoin. My suggestion is probably to buy IBIT, so you can actually have more and more of your so you have more and more IBIT that you can use to do kind of a compounding way of getting more shares, so you can do more of these covered calls, right? I have been talking with a few people that have been very successful. They say that they are disciplined enough where they can get about 5% a month in yield. And with IBIT, basically, you're owning Bitcoin. So it's not the ideal thing. I know that a lot of us are maxis, so we want to own Bitcoin, etc. You can always sell them later and buy Bitcoin with it. But it's a way that why IBIT? It's good because it has a lot of volume in terms of the option. It's relatively safe, because you don't have to go to these weird exchanges where to do these transactions. You can do it on Robinhood. You can do it on other, brokers here in the United States. It has all the advantages of a traditional finance, but with the volatility of Bitcoin. It gives you exposure to Bitcoin. So it's a very actionable thing using these indicators, because they give you a feeling of where we are and what is reasonable, right? It's all about percentages. You will never be 100% right, but it's a very powerful tool to do this kind of things that I think are very important for investor right now, because I show already graphs in my X account where I calculated what the annual return for Bitcoin are. Right now, we are talking about 45%. It is still amazing if you compare it with traditional investment tools. But if you are dreaming of some of the returns that we got 5 years ago, 10 years ago, where Bitcoin was doing 100%, if you add even a couple of percent a month of yield, now all of a sudden, by the end of the year, you have 60%, 70%.
Well, remember also the trade that you just identified, where you're selling calls, and it's not a covered call trade unless you're considering the IBIT that you own to be the covered component.
Yeah.
It's for a 6 day hold. So it's if you do that 4 times, 5 times in a month,
yes, exactly,
it adds up very significantly.
Yeah.
And the difference between doing weeklies as opposed to monthlies is that generally you're getting a higher comparative, the sum of the 4 weekly options that you'd be trading versus the price of the monthly option that you'd be trading are going to be different. Yes, there's more commissions involved in trading them, but it's going to be less, or it should be less, than the difference between the two. And because you're trading weeklies, they decay. You're at the steepest part of the decay curve, which means that these options, if they're not in the money and price isn't moving, they're just decaying, wasting assets. And because you're short, you're benefiting from that. So you have the opportunity of exiting and rolling them with more frequency than the monthly, and you're capturing that steeper slope of the decay in the few days that you're involved with them.
Correct.
So you have all sorts of interesting flexibility that you can take advantage of.
Absolutely. And it's these are things that do it little by little. You don't have to put a lot of money into play. You can. It's a learning experience. You're learning new skills, new ideas. I suggest to do the cover calls. This is why we do IBIT. The advantage also of IBIT, for example, relatively to MicroStrategy. So many people like to do this with MicroStrategy because it has more volatility. But it's also more expensive stock. With IBIT, we are talking about, so if you buy 100 shares just to start to play with it, you're talking about a few $1,000s, so it's not a big deal. And then you can learn these important skills about options and understanding financial terminology that you will not be familiar with. It's I will have some videos where I can introduce more of the topic, but I think it's one of the things that I really start to like a lot, in particular because I see a lot of people being quite successful with it. So yeah, these tools are very powerful if you use in combination also with the long-term power law, etc. You will have an advantage that other people don't have.
Yeah, this is very different. So, historically, what people would do if they're looking at implementing a strategy like you've just suggested, Giovanni, is they'll look at traditional technical analysis to identify support and resistance levels or Fibonacci levels or some other variant, and perhaps position their strike prices as a function of that. There are a lot of people who do that. This is an entirely different approach to markets, and with entirely different set of metrics that you can use to your advantage that just aren't available in any of those other tools.
Yeah. Another thing I'm thinking, I don't know if you thought about this, we could create some kind of curve, right? Like a distribution curve of a distance of these bars, of these target prices from the white line. So that will give us kind of a range, possible range.
Yeah, so I think that there's actually some research that we need to do there, and part of that research would be, is there information in the time it takes to move to get from one white state to another, and is there any implication of that for the length of the ensuing white state?
Right. Yeah, very interesting. Yeah. Probably there is information there.
Yeah.
In particular, because if you're thinking about what SORNet suggests, if you're looking at these log periodic oscillations, right, we should become faster and faster with time as we reach some kind of critical event.
Exactly.
So it's something that we need to study.
Yep.
Yeah.
But I mean, part of that so there are a number of exercises that I'm doing at the moment, and one of the first that came from a discussion with our group on the Discord for people who are using this tool resulted in this state table that appears at the bottom of the page for the static and the pulse, and it came from a discussion or questions about the significance of the distance between the two pulse lines, because they really move around a lot. And you can see it on any instrument. They cross each other sometimes, but the distance that they are from each other, and then they coalesce, and then sometimes they move up in a very dramatic way, but they're right on top of each other. What does that all mean? So I had already been doing some work on this, and it was very clear that there are a significant combination of a set of combinations that these relationships can be mapped to. There's like 20 or 30 of them. And there are probably 7 that are extremely powerful and are amazing indicators for a directional play. And there are, in addition to that, many other patterns that recur again and again that you can trade in the short term that are very different from swing trading, things like that. So whenever you get these tables showing double red, double green, it's a very strong signal. And when you get a purple signal, which is this period doubling, not like you're seeing. Let me just see if I can find one. Let me go to Bitcoin. So in here we have a couple of purple states, in these smaller moves in the pulse line, but here you can see the purple line is very, very, it's almost vertical. It's very strong, and you get this kind of schizophrenic sort of behavior when you get a breakout and the two lines are right on top of each other. This purple on purple for the static and the pulse is the most powerful signal that you can get. So just having this little monitor here telling us when that's happening is very, very valuable. But also there are some other dynamics that you can take advantage of, and I'll just show you some of these in history because it's pretty interesting. So back here in September of last year, we had this move right here that I'm pointing to, where the pulse separated from the static line early, and that's always a very strong pattern. We had confirmations coming through with some of the other signals and a stacking of upper targets from the temporal phase model. So this move is very typical, and you can see that the two lines start to separate, and then they coalesce again. We get a white state here, and then they go vertical, and then we get this sort of stair-step type activity. And there are a couple of things I want to point out. One is right here, you'll see this pattern occur many, many times. So we have the two log periodic parallel critical pulse lines converging and entering a white state, and then price immediately repels from that, and then it starts to go again. It goes vertical, and we get another white state. There's a repulsion here, but it's very short-lived. Same thing, another move up here, and then a very significant drawdown from this white state here. So these drawdowns, these movements that you're getting right here, things like this, are eminently tradable. You've got to be quick. They can be very violent, but they're very interesting trading opportunities that occur, and they repeat. So there's all sorts of opportunities that abound. So if you were to see that we've entered this white state, and it's the first in a daily chart, it's the first instance of a white state after several days of an upward move. If you're thinking of doing a covered call strategy, then you know that almost for the next 2 or 3 bars, there's going to be a pretty violent drawdown. Mm-hmm. So anything that's above this white state line, a call that you can short for 2 or 3 or 4 days, you're going to do pretty nicely out of because of this type of move that always occurs. So it's not just about these cluttered sideways type movements where the market's trying to figure out its true direction and purpose and behavior, that you can implement those trades. It's when you first. Here's another example. So we had this move up, and right here,
I can see that.
Yeah, you've got this big move down. So if you put that trade on right here,
that will mean that you could be a little bit more aggressive with your strike price, put it a little bit closer to the current price.
Yeah,
and that it will be still relatively safe, and that will mean that you can sell your cover call at a higher bid, higher price. Yeah, it's a very good idea. Yeah, I like it. I like it a lot. Yeah.
Yeah. So let's have a look at Master, see what it does.
Yeah, maybe even more exaggerated with MSTR.
Yeah, I mean, look at this.
Yeah. Strong correction.
Yeah. But notice that's where the two parallel lines have coalesced, which is very different from here, where the pulse has entered a white state. Sorry, the pulse had exited a white state here, but the static had not. The static took some time to get to a white state. But I think you'll find that for the most part, the clue comes from the pulse. So when the pulse enters a white state, you tend to get these moves to the downside more rapidly.
Yeah. Good. Yeah, very nice. I like that. It's very. I like these repetitive patterns that never, and nothing is 100%, but the fact that there is very strong consistency. This is almost a trader paradise.
Yeah. I'm very excited with the results that I'm getting from these tools. It's really interesting, And there's a whole pattern library that I've built off the back of this. That it's not like anything else. It's not. There's no subjective interpretation here. This is math, and it just resolves in these patterns with consistency across time zones, time frames, and instruments.
Talking about that, Chris, can you share with us the website so people can get more information? It's still a work in progress. We're going to do several improvements, but this is, what would be nice, Chris, to have actually a video, like an introductory video on the website, so people can actually learn about this tool. You can maybe upload a video there.
Yeah.
With a little tutorial.
I'll add that to my list of things to do.
Yeah, no.
So,
welcome to the, influencer life.
Yeah. Well, it's just a very busy time. I've got these 9 other tools that I'm trying to, get ready for everyone to
I understand.
Have access to.
We can make a list, and we're going to work on it. But we have this very nice website, guys. So you can look at the little scroller there, and you can see where to go. Complexitydrading.ai.
Yeah. So a couple of things. So when you come here, if Giovanni and I are going to do a newsletter, it's free. So if you just enter your email in this field here, you'll be able to receive that. If you're interested in the tools, there's a bit more information on here. As you scroll down, it tells you a little bit about what we're trying to do. We're really trying to bring tools to Main Street that are previously in the domain of Wall Street. So these tools are very, very sophisticated. You won't find them in too many places, if anywhere. Some of them are starting to proliferate. I mean, Sornet's work is obviously in the public domain, and a lot of people are adopting it, but very few people really understand it and how to implement it and how to use it.
Yeah.
And the sort of tools that we're building here with this suite, which embrace the power law methodology and related scientific methods, are only really found in some of the best quant firms on the street. So.
And now you can click on these.
So you can click on these, and it tells you a little bit about them. For the log periodic power law, there's a bit more information that's currently populated, and it tells you what it is and what it isn't. So these are very different from traditional technical analysis. These are
you can also sign up, right? You can sign up.
Yes, you can.
So the newsletter, just to explain, sorry to interrupt you, but the newsletter is free. So sign up. Anybody can, and we will get more into it and explain how to use these tools, the history, some of the ideas and all kind of stuff like that. That is free. But if you want to sign up and use the trading view indicators that we are developing, eventually we will have all of these. Right now, which one are active between?
So this one's active, and as I said, if you click on learn more, it tells you more about the tool, and you have to approach these with a whole new mindset. This is not a MACD, an RSI, an oscillator, a moving average. It's none of that. This is about state change. And that's the foundation. It's about, is the market moving with purpose, or is the market confused and doesn't know what it's doing? And this tool specifically helps you identify that and trade as a function of that analysis.
Right.
Then the remaining tools, and you can click on any of these, and there's a little thumbnail sketch of what they do. This is the temporal phase model, and this is the one that generates those target prices as a function of analyzing what the log periodic power law and various temporal phasing methods generate. Phase echo is a longer term methodology. It really tracks the sort of dominant rhythm that's underlying the market across any time frame, in the same way, Gio, that your log periodic power law looks at the sort of 4-year cycle of Bitcoin.
Yeah,
this translates that to lower time frames, and it just sort of runs in the background, and it'll pop up and tell you when, okay, the market has hit a peak or a trough. It's likely to turn around a little bit at some time in the near future. It's not a precise instrument, but it's like an early warning that the larger macro forces are about to assert themselves in the marketplace.
Yeah.
Then we have this other tool, the core line, which identifies sort of an attractor that the market is likely to be brought back to throughout the course of a trading period, as a function of analyzing the power laws. And then we have this other one called SIDE, which is a scale invariant dual estimator. It uses two models to estimate market direction that only fire when they agree. So it's looking at sort of both sides of things and saying, okay, we think the market is positive or negative. All of these different tools really complement each other and dovetail with each other and work together to enhance the log periodic power law critical pulse tool.
I love it.
The instability model is a bit more schizophrenic. It only signals when there's strong energy and compression occurring. The Fractal Node 6, which we talked about today, is this. It's a totally different tool. There's nothing out there like this, and it's really trying to identify. So in the analogy that I used before of looking at the crystals forming on their way to becoming an ice cube, that's what this is doing. It's looking at all of the different crystals and saying, yes, they're going to turn into an ice cube, or no, they're not. It's going to remain liquid. So It's doing that type of stuff. Then we have the super oscillator, which is four different oscillators that are normalized, and it's kind of like a mosaic, but it's colored, and it gives you a saturation table that tells you when everything is aligned and the market's moving very strongly in one direction or another, or indeed when the market's leaving that state. So you can see it wash in and out of these different conditions. Then we have the scale convergence overlay, which is another fairly rapid response tool that maps convergence across different oscillators and lays them on top of the critical pulse tool. And it's it's one that I like for, we looked at that white state where price comes up and we hit the white state, and then price falls away very quickly. This one, the scale convergence overlay, identifies and picks up on that using a totally different method on that dynamic with the power law critical pulse tool. So in conjunction, they're great tools for looking at these quick repulsion type trades from a level. It can be very twitchy sometimes, but it's great for that. And then we have the volatility burst tracker, which looks at clusters of elevated volatility. And when you get clusterings of these things occurring at different points in time, you end up with a precursor to some sort of a move. So you can get a stacking of these volatility clusters coinciding with the power law state monitor and the scale convergence overlay. And when these things coalesce, it's not like technical analysis where you've got an RSI and a moving average and an oscillator and a MACD stacking on each other, all measuring the same thing. These are totally different methodologies based in science, looking at totally different things. And when these are confluent, it's powerful because they're saying the same thing and reaching the same conclusion through entirely different approaches and methodologies. So really interesting stuff.
Good. And this is a package, right? So eventually when they come out, people can sign up.
Yes. So initially everyone will need to sign up for the critical pulse tool, which is the foundation piece. But then depending on your trading style, and we'll give some guidance as to your style, whether you're a swing trader, a scalper, a long-term trader, whatever you are, you can mix and match these tools in different groupings to suit your particular method of trading. And we'll allow people to switch them in and out so that they can figure out which ones are best for them. But it'll be the first time that you've ever had delivered to you a comprehensive suite of tools that are designed with science and designed to interact in a way that is previously unavailable to anyone in Main Street.
Fantastic. Okay, and right now, if you want to sign up for the first indicator, you just click on it, right?
Yes, you click on either of this button or this button. You click on either one, and you click subscribe, and it takes you, just fill out your details. You can subscribe monthly or weekly, and of course, you need to include your TradingView user ID on here, your username, so that we can then send the invitation to you to access the tool.
Okay, perfect. And if you do, and you are interested in applying them to IBIT and MicroStrategy strategy, please also sign up. Make sure that you sign up for the NASDAQ, right? We have TradingView as a service where you get all the information from NASDAQ and SP 500 and so on. So we have I think it's just $5 a month. I myself sign up. Yeah. And this will allow you to see live charts of IBIT, strategy, all the other companies that you can use these indicators to study them too.
Yeah, that's right. So if you have just one of the basic memberships of TradingView, some of the NASDAQ shares are provided through CBOE1, I think it's called, which is kind of a discount freebie that TradingView has negotiated. But to actually get the prices for NASDAQ and for them to function with these tools and others, you need to subscribe to the NASDAQ data feed.
Yeah. Okay. Very good. We don't have much of questions, but we have a comment. ZooPilot is one of our fans. Hey, ZooPilot. Yeah, I know, right? It looks so good. It's like, okay, I want this. It's like a buffet, you want all kinds of different tools and foods and so on. Yeah, I am amazed how useful these tools are and powerful. And I'm always feel frustrated with the usual indicators. I never talk about them, even things like Bollinger Bands and RSI that probably are the more scientific ones. They are very disappointing most of the time. They don't really do what they are supposed to do. It's always a delayed signal,
Well, that's the problem. That's the problem that all of these tools have. I mean, even moving averages. I mean, people talk about golden crosses and death crosses, and I mean, those signals are so delayed for a start, but they're very long-term signals.
So silly.
But then people do things like you have exponential moving averages. You have a dozen different types of moving averages, all designed to try and overcome this delay issue. And we don't have that.
Yeah.
We are, I mean, the analogy that I use is, lightning and thunder. And if you think of the critical pulse tool, the pulse and the static pulse line as exactly that, lightning and thunder. So the closer you are to lightning, the sooner you hear the sound of the thunder. The further you are away, the longer it takes for that information to get to you. So with these tools, you're getting closer to the source. And with the fractal node, you're right at the point where the lightning is striking. And you're hearing that noise immediately. And ordinarily, what happens is that information gets, there was a lightning strike. Did you hear the thunder? And then came the rain. Well, it gets on social media, and then it's on the news, and then everyone starts to trade it. Well, guess what? You're right at the source with these tools, and you can't do that with traditional technical analysis.
It's beautiful. Okay. I think we covered a lot of ground. We will be here next week, same time, same place.
Yeah.
Thank you very much to follow us.
Bye, thanks, guys. Everyone. Bye.
Bye, everybody.